Okay, so I want to switch now from long-term to shorter-term trading. But before I do that, I want to make certain that we've gone through all the investing strategies because I don't want to have to go back because now we're going to get into trading. So let's see if there's a wrap-up, questions, and then I'll try to give a quick wrap-up on it. Any questions on the investing strategies in the marketplace? Yes?
I appreciate your opinion about the 20-day moving, 200-day moving average. Most technical analysts, they believe when the 200-day moving average is in an upward trend, that means the trend is up. When it starts to go down, means the trend is changing direction. Is there any, what's your opinion about it?
A 200-day moving average is a moving average. Sometimes it works, sometimes it doesn't work. It's a good overall direction of the market, but there's no reason prices will continue going down. They may continue to go right back up. So is it a be-all, end-all? Not even close. It's a measure of the current trend, but it's not a forecast technique. So if we're below the 200 moving average, but unemployment rate is 18%, I don't care about the moving average. I'm going to buy stocks because the Federal Reserve is going to come in and do something. So it's just a measure of trend. You can probably look at a chart and notice, but in terms of make it into some mystical trading formula, I haven't been able to do that. And I don't know anybody else that has. It's a measure of trend. That's all that it is. Please.
With the baby boomers taking money out of the market to sustain their retirement, do you see that having any major influence since it's such a big group and we're in the middle of the retirements?
Well, we know from the Fed, they think that this 35 to 49 group is there and they'll spend money. They've got some money put aside. And remember this, if people put money out into the retirement program, where does that money go?
Into the market.
Into the market. Glory, hallelujah. Right? So that's really good news. In fact, if you look at that, I'm digressing a little bit. This is not in your course material, so just note it yourself. Because we have so many people putting so many dollars into retirement programs, the funds buy when the money comes in. Would that make sense to you? The money comes into the funds when? First of the month, middle of the month. So you'll see stock prices tend to rally right at the end of the month and the first trading day of the month and around the 11th trading day of the month, the 15th of the month. The money comes in, we get a little rally. The money comes in at the end of the month, we get a little rally. There's a lot of short-term trading opportunities based exactly on what you talked about because the funds have the money. They've got to do something with it. And there's definitely a clear impact in the markets around the last and the first trading day of the month and the 11th trading day of the month. That's when they come in with the money. They got to buy stocks. And for the most part, they're buying stocks in the S&P 500 and the Dow Jones Industrial Average. Why? You can't be criticized for buying a stock in the Dow. If you go buy a coal company right now, they've been a disaster, you could be criticized for doing that. You could get fired for doing that. But if you buy a stock in the Dow, you bought a stock that God approved of. You can't get criticized for that. So the flow of funds really comes into this select group of blue chip stocks, which I think is one reason to help us understand upward drift. Please.
I do apologize, but the scale on the left side, it's not really visible here in terms of the number itself. So you have shown us few methods how to invest. Which of those is the best in terms of the generation of the numbers?
So Peter, which is the best to invest in? It depends on how complex you want to make it.
If I don't care about the complexity, if I'm willing to...
If you want a complex system, a whole lot of work to it.
No, I want the money, I don't care. That's what I meant.
I'll go from easy to hard. The easiest is we're going to buy stocks at the end of each quarter. We're going to roll into, at the end of every quarter, we'll look for the 5 lowest priced stocks that have a positive forward 12-month PE. That's the easy one. And it makes 20% a year. Well, some years 19%, some years 20%. On balance, you'll do 19 to 20% a year. And I started doing this, researching all this in 1998. So this has been around a long time, well tested. I have no problem standing in a room of friends, a lot of your friends in my personal life saying, you can do this, you're not going to get burned. Where the other strategies, I'm a little afraid, but I have no fear of telling you this. Nor do I have any fear of telling you, if you want to get more complex, you could multiply the price sales ratio by 10, add that to the 12-month forward PE, take the screen for the 10 lowest price stocks, of the 10 lowest price by the 5 that have the lowest combined PE price sale number, if you want to get more complex. If you want to really have to do some work, then you're going to find the 5 comparatively strongest stocks in the Dow at your buy points and buy those stocks. We can't computerize that, so I can't say here are the results. But those results from my own personal trading I know are quite good. So those are the 3 approaches.
When it comes to relative strength, what's the index used?
I don't use relative strength. I don't believe in it. I want to leave the, because these both may be down the same percentage, but this is holding up more than that one. So I'm really about comparing the price pattern. Because on this decline, on all, this is the average, right? All of the other stocks declined. This one didn't. This is in strong hands. And if it's in strong hands, it will rally more than these stocks as this market turns to the upside. It's a huge, huge tool that I use. I'm just all the time in my commodity trading. Like right now, silver, you just look at silver versus gold. Gold kind of looks strong. Silver, just weak, weak, weak. You want to be a short seller of silver. And I do that always comparing futures or individual stocks. Please.
When you compare them, what are your
Time frame,
Yeah.
recent market lows to recent market lows, since I'm looking for buys. So as we saw, we were looking at the low recently versus about 3 months ago in the Dow when we looked at Home Depot and those stocks. That's what we're looking for. Not the last 2 or 3 days, but are we generally a lot stronger in this stock than the average itself has been?
is it weekly charts?
I was looking at daily there, covering about a 3-4 month time period. It's amazing. You'll be shocked when you go back and do this. Go look at the lows in 2009, and you'll see a surprising number of stocks that didn't make a new low when the Dow did. Quite a few of them. So those are the ones you want to be a buyer of. That wraps up the investing strategy. So now we're going to turn to what you all want to do, become traders, right? Actually, trading is a lot more difficult, and you probably won't make 20% a year trading. That's the bad news. The good news is I'll still teach you how to do what you can do. So it is possible to make money trading, and we're going to ultimately get to a somewhat mechanical system for you to do it. The big thing, though, is what stocks are you going to buy as a trader?
Once they go up.
The ones that go up, absolutely. And if it doesn't go up, don't buy it. All you have to remember, Mark Twain's advice. You want to be in the active, hot, volatile stocks. I know what those are right now. Apple, Walmart, Amazon, a few others. I don't know what they'll be in 20 years from now when you're watching this on a videotape. I know what they were. They probably won't have videotapes 20 years from now. I wonder what they will have. Probably watches or something. Our communications will be different in 20 years from now. But the stocks that we want to focus on are the active ones that are traded the most, that are volatile, because you need movement as a short-term trader, intermediate-term trader to make money. You don't get much chance for upward drift. As an investor, I have upward drift. As a trader, I've got to have upward drift. Now, that's volatility. So those are the most active stocks. The most active stocks when I started trading in 1962 were Syntex. Doesn't trade anymore. You probably don't even know who Syntex. Anybody know what Syntex did? Birth control pill. Changed society, and now it doesn't trade. Natomas, big oil company. Clearview, another hot stock. Hohen Company, they made printing presses. Most active list day after day after day. Not around anymore. So those group of stocks change. The most active stocks 10 years from now probably won't be Amazon and Apple. It'll be Alibaba. Who knows what it'll be? It'll be something. So that's where you'll focus for the most active, the most volatile stocks. That's what we want to trade. And in your own life, you're probably going to find companies you like I like Costco. I like Fastenal. There's a group of stocks I like. So you may have that own, a couple dentists in here, you know dental company stocks, there's a couple lawyers, you know about the legal publishing companies and some lawyers that are funding lawsuits and stuff. So whatever your sphere of influence is, you're going to have stocks around you. Maybe you're involved in athletics, so you're going to be looking at Nike or whatever. What I'm going to teach you will handle those stocks, but they need volatility to them. Without volatility, you're not going to get much bang for your buck. Just keep that in mind. So, given that, these are the tools that I like to look at to be a trader. I want to look at money flow. I want to see that there's a good accumulation coming into these markets. Smart money is buying this stock. I'm going to use the volatility measure. We'll explain all these tools. I want to look at the volatility of the stock because volatility is a phenomenal tool to give me buy signals in individual stocks. I'm going to look at my Ponch index, that most of you know. How many don't know my Ponch index? Okay, Ponch index is a wonderful setup tool for a buy signal. We use that. We'll use valuation. We want to value our stocks to see if they're undervalued or overvalued technically. I'll teach you that today. We'll look at the seasonal pattern of the market. Huge, this is so important. We want to see if it's being accumulated by short-term traders. And finally, you can look at the advisors. Are they bullish or bearish on the market? So we have 7 tools that will help us find a stock when it's ready. Whenever I speak, I had it happen last night or the night before when I spoke in Orange County. Somebody came up and said, what stock should I trade? I said, well, whatever's set up the most right now. Go, oh, really? And people always, what commodity do you trade? Well, I trade whatever's set up the most right now. Because they think like there's one holy grail commodity to trade. There isn't. I want the one that's ready now for a move, right? Because they don't all move at the same time. So how do I find that? With these tools. Now I use these tools for the most part on a weekly basis to find my weekly setups in these individual stocks. I'm going to start on a weekly chart, then we'll bring it down into a daily chart to confirm, get some more signs, and of course to get our entry into the marketplace. But for me, it all starts with the weekly charts to find a setup. With that, we're going to start to look at the indicators themselves. So this is Apple. This is our money flow index. It's similar to the commitment to trader report. When there's been a lot of professional buying in the marketplace, Apple is most likely to have a rally. Not always. Nothing's perfect in this business. But most of the time, if there's been a lot of money coming in buying this stock, it's ready for a rally. So all I have to do is look for a trend change in the marketplace. The money flow is really a critical index to find, oh, this market's set up. I want to be looking for a buy signal over here, up here. This is Intel. It doesn't get set up very often, but we're at a high level. I want to be a buyer. Aggressive buying coming in by the funds in here, over here, and here, and here. That sets up some explosive opportunities for me as a trader to take advantage of. I want to see somebody bigger than me is putting their money into the market. So if I like Costco, you know what, I just buy it any day. I want to make certain that the funds are buying it. If I see that the fund index, the money flow index is at a high level, it means they are buying this stock. And I probably better wake up to that fact and think about how do I get in this. So I use my money flow index a lot. And it's very similar to our commitment to trader report data. Harry, if you would.
Green line.
The green line is when this gets up to about 74% buying. They've been doing that much of their action in the market has been buying. I want to be a buyer. Those of you who get the TradeStation pack, tool pack, you'll have the green lines and everything are all on there for you automatically. So you'll be able to, oh yeah, we're in the buyer. You know, I better be thinking about, I'm looking for buy, if this is your stock, you better be looking for buy signals in it. Please.
Some of those buy signals look a little early, like again.
Oh, some aren't perfect, are they? Yeah.
Just kind of get in and
Yeah, sometimes you're going to lose money trading. You're trading or not. You know, we don't lose money with the upward drip, but with trading, yeah, you probably got in here, and that, you know, you've got a 1, 2, 3, 4 week rally. You may have made money, may not have. Here, oh, finally we get a trend change in here. Yeah, we'll do okay here, but they're not all going to be perfect. Absolutely. We're going to try to get a little bit better, though, by confirming not just one tool there, maybe 2 or 3 tools that would confirm it, right? Okay? So my VIX index, this is a really interesting indicator I developed when Louise and I were living in Australia. I wanted to have a VIX index for the Australian stock market. They didn't have one. So I developed one for their stock market and then started applying it in stocks in America. And wow, what a difference this has made. This is my VIX fix strategy, which won the Market Technicians Award of the Year. Amber Hester did a paper about it, how she used this to trade stocks and options. For you option guys, you might want to Google Amber Hester, H-E-S-T-E-R, MTA Award, based on the Williams Volatility Index. What she found was when the volatility index is at high levels, you're going to increase with the VIX fix index your buy and hold at 6.8%, a lot smaller drawdown than buy and hold, average drawdown a lot less than buy and hold, your time in the market 13% to make the same return as being in the market 100% of the time. So clearly we have an indicator here that's going to help us spot opportunities, so we're not just like a wandering generality going, oh, what if I buy today? Hey, you know, what did my shoe shine boys say? The VIX fix index will help us narrow in our time zone. And here's the VIX fix index on Apple. And by the way, this is published, the formula for the VIX fix index I wrote about 10 years ago maybe in one of the magazines that's no longer in business. None of these magazines are in business any longer. But you can Google it and find it. Basically, when we get high in the VIX fix index, we're close to a market low point. We want to be looking to be a buyer of a stock, don't we? It doesn't call every buy point, but when volatility is high, prices are ready to rally. Some of you are following the VIX index now that they use in the marketplace. Volatility always increases in declining markets. It always declines in rallying markets. Always. That's the way it works. If a market's declining, volatility picks up. So your volatility is a sign of you're close to a bottom. With high levels of volatility, we're not far away from a market bottom. But we don't have volatility indexes for individual stocks until I invented the VIX fix index. So now we do have a volatility index, and we know this is about as volatile as Apple ever gets. So we can draw a little line across here and say, aha, I need to be looking for buy signals in Apple or whatever the stock is because volatility is extreme. And it may get more extreme. I'm just alerted to, right here, I'm alerted to look for a trend change, trend line, buy signal, whatever, a rollover in volatility. It's a setup tool in the marketplace. So here's Apple. Wow, Apple didn't get a lot of volatility signals for us, did it? This is on a weekly basis, but when it did have high levels of volatility, we always rally. Low levels of volatility occur when the market's going up. You don't get increase of activity, volatility, until the market starts to decline. Then you get a pickup. So if you're using the VIX index for the stock market or trading the UVXY or the SVXY, you need to remember volatility only increases during declines. That's why this indicator works. And it can, like a rubber band, only stretches so far before it pops, right? So volatility is a great setup tool for markets, and that's one of my favorite setup tools. How many have been following my Larry TV recently? Great. Well, a couple, maybe a month ago, we said don't buy stocks yet. The volatility index isn't high enough, right? So we sidestepped the whole thing. So not yet, wait. Then volatility got up. Okay, August 24th, buy. It was a volatility index that kept us on the right side of the market. It wasn't ready for a buy point yet. The volatility index is really, the VIX fix index, a great tool. So here's Altria, one of my favorite stocks, Philip Morris, the old Philip Morris company. So we have volatility. You can also just put a trend line on volatility for an entry in the marketplace. Volatility starts to pick up. We know it picks up only because of declines. Volatility picks up, rolls over, I want to be a buyer. Volatility is picking up as we decline. We take out the trend line, I want to be a buyer of Altria. This is on a daily basis now. Same thing over here, nice little buy signal. By the same token, when volatility starts to come up, you're at a market high. Volatility is going down, it picks up. We know it only picks up because of selling pressures. You're at a market sell point. It's a wonderful tool to use to help confirm your trades and to an extent to time your trades. The VIX index, it's in most all of the software now, I think, because we announced it publicly, and it will be in the software that you'll get with your course. Questions on volatility? Some of you trade volatility, right? It's a very explosive market. Please.
Is it the same formula mentioned in the metaphors.com, the forex, the
Yeah, everybody steals my stuff, so it's probably, just Google Williams VIX.
I tried.
And it's there.
Yeah, I tried to take the Bollinger Band of it. When
Yeah,
it works really great.
it works a little bit. Absolutely.
It works really with all the minor things. You don't have to go.
But you're getting so much into little minutia. Stand away a little bit. Well, it's like when it's really high, I want to look for a buy. When it's really low, I'm probably going to sell and look for a trend change. We try to make this so complex. Think we can do every little thing. This is not a business for perfectionists. This trading, if you're a perfectionist, man, pick up your computer, turn it off, find the door. You go crazy in this business. If you just can't say, duh, I got hurt again, you're in the wrong business. This is. And of course, we strive for perfection. One of the problems I think we have as traders, I did when I came in, I read about W.D. Gann, who in what I read, he never had a losing trade. He sold the absolute high ticks of markets, bought the low ticks of the markets. Well, if he could do it, I could do it. 53 years later, I'm still working at it. And after even meeting his son and talking with his son, I don't think he did it. But we have that image of we can do this spot on. We can't. Just accept it. You live a lot longer, I think. Okay. Amazon, same thing again. We can put a trend line on. Oh, volatility starts to pick up. Volatility is high, starts to come down. We can look for a buy signal. Oh, we're a little early here. Probably got stopped out. Oh, got another buy point over here. But volatility picks up only in declines. And when it gets so high, we're close to a market low. That's a good setup tool for us as traders. Please.
From the risk management perspective, in terms of investing, it was not an issue. But when we are trading, what would be the strategy to manage risk?
To manage risk with
The stop losses, or what way we should do it?
We'll get into that. I'll show you where your stop loss should be as a trader.